how high is the probability you think of hyperinflation?
Well, if you ask me directly, I think it's almost inevitable because you have democracies. In democracies, the tendency for hyperinflation will be very high because the system is built on votes and you have to please people. So the way to please people to vote for you is to promise them uh, all sorts of goodies, all sorts of benefits, subsidies, paying less for services, and so forth and so on.
Maneco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Marc Faber. He's the editor and publisher of the Gloom Boom Doom Report. His website is gloomboomdoom.com. Marc, it's been a while actually since you've come on my channel. It's great to have you back.
Thank you very much for having me.
You're welcome. I want to start out. You recently wrote about why investors should be worried about residential home prices in the US and also stock market prices. I thought it was really interesting because you touched upon the fact that President Trump, like most other presidents, wants lower rates. So maybe we can start on that.
Yes, I mean, as you know, with your age, interest rates are not particularly low at the present time. They're particularly low if you look at the last 20 years. But if you look at longer term trends in interest rates, in particular in the 70s, when the rate of inflation was what it was recently, in the 70s, we were already on the 10 years treasury over 6%. So the current rate of interest rate is not particularly high, historically seen. And in my view, to push interest rates down at the present time, as Mr. Trump and Mr. Besant would desire to do, would imply essentially an artificially low rate of interest that may trigger again inflationary pressures. The inflationary pressures are not over, they're still there, and the impact of the tariffs on prices are still there. And so the bond market actually has reacted quite in an interesting way when the announcement came that the package was signed and came through, the bond market sold off. So my view is that Trump, he would like to have lower rates because obviously the interest expense that the government is paying on the debt is the fastest growing budgetary item. And over time, in my view, with the deficits such as we have, over time, it's likely that the interest payments on the debt will eat all the tax revenues. You understand? And that is then a situation which will be very difficult to prevent hyperinflation because you have to monetize that debt. As it is already happening at the present time. So my view is that the intention by Trump and Besant to lower interest rate is backfiring very badly.
Yes, like last year, we saw already before Trump was elected that the Fed cut rates like three times, one by 50, one by 25, the other by 25. and the 10-year yield actually went up 100 basis points because I think the bond markets are concerned, like you said, that inflation's still there. M2 is still like at record highs now in the US. And so you think that if Trump were to push someone to at the Fed to lower rates to 1%, I mean, yeah, it could backfire and it could push the Fed to do more QE, but that would lead to hyperinflation. And I've been covering hyperinflation for a long time on my channel. I started about 10 years ago. I even have a playlist with like dozens of videos about hyperinflation because I've studied, Mark, the hyperinflation in France in the 1790s, the Weimar hyperinflation. And to me, all the ingredients are there. The last ingredients that I was waiting for in the last few years was the political chaos. And I think we're getting that. So how high is the probability you think of hyperinflation?
Well, if you ask me directly, I think it's almost inevitable because you have democracies. In democracies, the tendency for hyperinflation will be very high because the system is built on votes and you have to please people. So the way to please people to vote for you is to promise them uh, all sorts of goodies, all sorts of benefits, subsidies, paying less for services, and so forth and so on. And that these measures all create essentially a deficit, both parties. So the incentive is actually in democracies to have budgetary deficits that increase the government debt. And by definition, this will then lead to higher inflation because someone has to pay for something. Inflation is actually the symptom of a tax. This is what you and I and everybody pays because not enough tax revenues are collected directly. Because the direct collection of tax is unpopular. If I go to the people and I tell them, look, we have these deficits, what we've got to do is either cut spending, you will get less social security, you will get less benefits, you will get less subsidies, and then you think you're going to vote for me? No. And if I go to you and say, look, we've lived beyond our means, we have to increase the taxation on you, people will not vote for you either. So you promise them all sorts of goods, you can't pay for it, you have deficits, fiscal deficits, and that is then leading to higher inflation rates, and that is the tax you pay indirectly. Nobody realizes it, but it's a tax in the sense that prices go up more than incomes. This is your tax.
Yeah, and Lenin said that not one in a million person understood this process. And you spoke about democracy, and we've seen recently in the UK where I live that the the government had to backtrack because they're trying to do welfare reforms to cut back on welfare, but a lot of the MPs on his in his own party protested. So now they're gonna start spending again, but they're gonna have to tax. And in the States, of course, yesterday the House ratified the Senate big beautiful bill version, and President Trump is supposed to well, he's going to sign it into law today as we speak here, 4th of July. And his argument is that the economy will grow so much that the debt will be written off. But there are some people like Rand Paul and Thomas Massey who think it's the completely different, wrong thing to do. And I even spoke, Mark, recently that historically there's no country in the history of the world has ever been able to get out of debt by issuing more debt. So I don't see the U.S. doing that either. So maybe we could switch over to the investment part of things. If people, some people hopefully are fortunate enough to have been able to preserve some of their savings because in the last 10, 15 years, things are just getting more and more out of hands. I was reading, Mark, in the FT today that the ECB is worried about low inflation, which seems really crazy. You know, they want 2% CPI, which means in 36 years, your savings go down by 50%. So, yeah, what are the ways you think that people should uh, use right now in order to protect their savings? Do you think all the all-time highs we're seeing in like the stock market, some commodities is and also the drop in the dollar, is that a symptom of this hyperinflation or crack up boom?
This is a very good question and very appropriate because, I mean, you studied inflation over history in different periods. As you know, one of the most, uh, say, well documented periods of history is the 1918, 1922 hyperinflation in Germany. And here I have the book by Constantino Bresciano Turoni, The Economics of Inflation. Uh, and he describes the impact of inflation on everything, on foreign exchange, on the dollar, on the German mark, and on assets like stocks, real estate, and so forth and so on. So during monetary inflation, prices go up. But the problem, and that was already observed in the 17th century by Copernicus, the prices don't go up, evenly. In other words, that all prices rise and fall at the same time. No, the prices go in this corner of the room up strongly, and maybe 10 years later in another corner of the room, and so forth. So it creates a huge wealth uh, disparity, inequality, and it's very difficult for ordinary people to navigate this kind of movements. And but in general, asset holders benefit if they have assets. Now, as you know, poor people in the Western world, most of them have no assets. They have liabilities. So they're very badly hurt. And we've seen this in the last 20 years. The wealth inequality in democracies has gone up everywhere. The rich people, they own stocks, they own precious metals, they own real estate, they own art, they own collectibles, and so forth. All these assets have gone up a lot, but the rich people don't consume as much of their income as poor people. In other words, if they go to the grocery shop, they don't care if the price of butter goes up, say, by 20%, because they don't eat 20% more butter than some poor guy or double the quantity as some poor guy. So they don't care about the price of groceries and so forth. But poor people and the lower middle class, they do care. And that's why you began the presentation by talking about the real estate market. This is now an example of the devastating impact of inflation on people because the real estate prices are going up but the demand is going down very strongly because of affordability issues. People would like to buy a house. It's not that their taste has changed or anything. They would like to buy a house, but they can't afford it. So we have a very strange economy where the economy of the typical household is suffering. There's no question about this, that the typical household in America and Britain is less well off. The standards of living of the typical household have gone down in the last 20 years. There's no question about this. You look at Britain, you live in Britain, you can see it yourself. And the standards of living of the very wealthy people, we have wealth nowadays that is unbelievable. I mean, you look at Musk and Bezos and all these characters, their wealth is surprisingly large, but they are not the ones that will consume a lot. They are the ones that own the assets. And by owning the assets, they can multiply the assets so they own more and more. Whereas the poor people, they pay the interest on their debts and so forth, and they're struggling more and more. That's why during hyperinflation periods, it's wrong to think that the economy is strong. No, it becomes very weak because of the lack of affordability. And in this period, the only way to essentially survive financially is to own assets that cannot be multiplied a lot. I mean, say, you could own some real estate, it will protect you to some extent, but you have to be careful to own the real estate in a country that inflates less than the other one. Because you pointed out just now that the dollar has been weak. The dollar weakness is a symptom of inflation. The market realizes the US is inflating, so the dollar value will go down, the purchasing power of the dollar will go down. So let's shift money outside of the US dollar. Now, the question is shift outside of the US dollar into what? Young people have shifted into bitcoins and other cryptos and so forth. And the more, let's say, mature people, they own precious metals. And precious metals have gone up a lot. Uh, I mean, not all of them. Gold has gone up a lot. Platinum hasn't gone up a lot yet, but is now catching up. And silver has gone up, but not that much. So we can measure relative to gold, how are the other precious metals? I would say silver and platinum are relatively attractive at the present time.
Yeah.
But you understand,
Yeah.
to navigate through an monetary inflationary period, the best is to avoid the currency. Because the currency going down a lot will lead to social consequences that are unpleasant, including expropriation, as an example. And I would not be surprised, say, in the US, that at some point, especially if Trump remains president, that at some point there are foreign exchange controls to the extent that you and I, who have dollar assets, can't take them home, can't sell them.
So, for example, if we have exposure to mining stocks and things like that, they could basically freeze our holdings.
Well, that is a possibility, yes. Also, if you have an exposure to NVIDIA or an American company and you sell it and you want to take it home, and exchange it back to, say, I don't know, British pound. The only problem in that view is that the other currencies are not very desirable either. So the only way to exchange something that would be desirable would be essentially to sell holdings in dollars and transfer them into precious metals. But this has happened to some extent, not much yet among individuals. Individuals, I mean, in your circle, you can go around Schönerid and so forth and ask people, they don't own any gold. They will say, yes, we own some gold. I inherited from my grandmother 3 Vreneli. These are Swiss, they have some numismatic value. But in general, people, they own more Tesla and Nvidia and Facebook and so forth than gold. And it's interesting, although the price has gone up, the ownership in ETFs hasn't gone up. Normally, I lived through the 70s. I can tell you in the 70s in Hong Kong, the big thing was London gold trading. Everybody knew 24 hours a day what the price of gold was. Everybody was trading in gold. I was running the office of Drexel Burnham Lambert at the time, and because we didn't have internet in those days and fax just was coming up, people came to your office at night. There was a visitors gallery. We had a visitors gallery. Then people would sit down and trade with the traders the whole night. And first they went to the nightclubs, picked up the girls in the nightclubs, brought them to my office, and I had to serve beer and, and whiskey and cognac.
That's interesting. And so do you think it's because it's mostly central banks right now buying the physical gold and the public is not involved yet in the ETFs?
They're not involved.
Yeah. And
I
then
mean, if
what
you
about
go around Switzerland or if you go around America, do you ask people? Most people don't know what the value of a gold coin is in America. If you go to the street of Los Angeles or any city, you show them a coin of, say, an ounce of gold. An ounce of gold is worth more than $3,000. At the side, you show them $20 bill. You tell people, you want a $20 bill here now that I give you, or is it $50 or $10, or you want a coin of gold? My here is physical is worth much more. They will choose the $20.
yeah, I know. So is that where, I mean, diversification is a good thing, but do you think it's really important to have some gold and silver in the hyperinflation, of course? And what do you see like the aftermath? I mean, the poor and the lower middle class, they're already in bad shape. So I don't think, I mean, a hyperinflation would hurt everyone, but would it be more, it would be more of a blow, I guess, to the very wealthy who don't realize what's happening. Is that the way you see it? And would tech stocks do well in a hyperinflation? Because I know in Germany, a lot of the stocks that were involved in the real economy, like manufacturing, chemicals, and engineering, they did well. But it was the banking and insurance stocks that did the worst.
Yes, but it depends. I'd say during hyperinflation, a lot of wealth is being created by some people. Uh, they they are the smart operators, like the Wall Street guys. They create enormous wealth. The hedge funds guys. In those days, there were not no hedge funds, but there were people that abused the system. The parasites, they know how to use the system and deal in foreign exchange and so forth. And there are huge trading opportunities in the stock market. The stock market first in 1918 to 24 they suffered very badly. It went down. Yeah, not in nominal terms. I want to stress this. In nominal terms, stocks always go up in during hyperinflation, and the currency goes down. So, adjusted for the currency, stocks tend to go down in real terms. We call that the real terms. But they become so cheap at some point, like in Argentina, more recently, before Milei got elected, that offers they go ballistic up. And then you make money both nominally and in real terms because the currency depreciation no longer exceeds the stock market increase. But in general, you're better off. I mean, in particular in Germany, this I want to stress to everyone. If you bought in 1900 stocks in Germany, you bought the stocks, say Bayer and BASF and all these industrial companies, and I, being smart and worried, I kept my money in cash. You are still very wealthy because a lot of companies, surprisingly, they survived the hyperinflation and they survived the World War One and World War Two and so forth. And cash became worthless on numerous occasions. So the point I want to make, in a hyperinflation environment, in time everybody loses out. That I because it leads to essentially a war. It can be a civil war, or in my view, the next war will be a global war. And the reason why this inflationary trend leads to war is the politicians will have to find someone to blame. They cannot blame themselves. You know, this is interesting in America. When we look at the Democrats and the Republicans, basically Trump, he hasn't published the Epstein files. Why? Because he's also in there. So the politicians, they all have file on each other. And then they go and tell the public, okay, we're going to do this to his administration and so forth and so on. But in the end, they only touch the surface because they know that if they attack Hillary Clinton, she will attack him. He hasn't done anything against his enemies, nothing at all.
Yeah, I remember the first term he had during the campaign. The people were chanting lock her up," and the first thing he said was, "Well, the Clintons are good people, so we're not going to lock them up." Um, just one final question here, Mark, that I wanted to ask you. Do you think this Trump trade war or tariff war and trying to reshore American industry, do you think that is possible and that's going to solve all the problems, or you think it's just more desperate? It's like the Thucydides trap, a falling empire trying to do whatever it takes to stay on top.
I think it's a gigantic lie. It's not going to work. It's physically not possible to reshore. And if they reshore some industries, it would be negative for the US. I mean, economic development is a dynamic process. You don't want to produce shoes and Nike sneakers in Schönried, where you're staying at the present time in Switzerland, where they have wages, hourly wages of something like 30 Swiss francs an hour. You should be grateful that there are countries like China, Vietnam, and so forth that produce these shoes at very low prices. If you impose tariffs on these shoes, who pays for the tariffs? The people that consume them in America. The consumer is a tax. A tariff is a tax. There's no question about this. And the countries that have had protectionism, eventually, you look at Argentina. Argentina was a country with a lot of protectionism. It impoverishes the country, doesn't make them dynamic. So I think this onshoring BS is a complete nonsense, is not going to work. And I think Trump, and I have to say, would have voted for him, and I would still vote for him today when I look at Kamala Harris and Biden and these people, or Newsom in California. But essentially, he is someone who is ignorant and an interventionist who doesn't know what he's doing. In economics, the best is not to intervene, to have a free market. We all know that. But if you intervene, you should know very well what the consequences are. And he doesn't know it. And Besant, he doesn't know it either. The fact that he was working for a hedge fund doesn't qualify him to be the Treasury Secretary.
Yeah, and it's interesting because in your last article here on gloomboomdoom.com, and I'm going to put a link to it below in the description. You say this, and I like this comment because Voltaire also said, Mark, that paper money usually always goes to its intrinsic value of zero. But I didn't know that. He also said he must be very ignorant, for he answers every question he is asked. Can you just elaborate on that one? Is that because thinks he knows everything and he answers every question?
Yes, this is the message. I
Okay.
mean, the fact is simply the world is very complex. And if you ask me, say you would ask me about what do you think will be the result of the hostilities in the Middle East, including the Gaza war. I don't know. It can go in many different ways. So I think as an investor, you're better positioned, assuming that you don't know, than assuming that you know something that is then proves to be false. And there are too many uncertainties. The problem is that in times of great uncertainty, usually assets are cheap. But this time around, they're expensive, except there are some sectors in the market that are relatively depressed. European stocks, emerging markets, in particular Latin America. Latin America is, aside from Argentina, which has gone up a lot, but in general, Latin America, everything considered, the geopolitical situation and so forth, where war would be fought physically, is, in my opinion, reasonably attractive. And I think, and this I've written now for the last 6 months, gold had moved up a lot, but platinum had not moved at all. And now it's broken out. I think that platinum could go ballistic because if someone thinks it's true, and I have to say that platinum on numerous occasions was more expensive than gold. So now it was at less than $1,000. Gold was at 3,000. It's never been this cheap. It was at the lowest level in 122 years compared to gold. I think we may go up again and exceed the price of gold. So here you have an asset that has a large upside potential with a limited downside risk, whereby limited is 30%.
Yeah. And what about silver? Do you think silver is also compared to gold? I mean, it's quite cheap.
Compared to gold, just about everything is quite cheap.
Yeah. Yeah, that's right.
But you have to understand gold has some qualities the others don't have. And the central banks, not being particularly bright, they accumulate gold. They don't buy platinum and silver. I mean, Besant, if he was so smart, he should buy up the whole supply of platinum and drive up the price 10 times. That's what he should do. The Treasury in America, they should have bought gold for the last 40 years.
Yeah, and we don't even know
They
if
could issue money, they could issue dollars and buy gold.
yeah, and we don't even know if they have the gold that they say they have in Fort Knox.
I would say, given the record of lies that come out of politicians, you should assume that they don't have it,
Mark,
that it was stolen a long time ago by the ruling families in America, by the politicians.
Mark,
That is what I would assume.
yeah, yeah, that gold is long gone, I think. And with that, Mark, I'm gonna thank you, and hopefully we won't wait as long to talk to you again. And I wish you, yeah, a very good weekend.
And I wish you a happy time in Switzerland.
Thank you. Yeah, I'm enjoying
A
it.
little bit expensive.
Yeah, well, that's the other thing I wanted to tell you though. When I moved to the UK from Switzerland, 1992, 1 pound was 2 francs 80, and now it's
Yes.
108. So maybe, yeah, it is expensive here, but it's the other currencies that are getting so bad, and it looks more expensive as well. That's the other thing.
Yes, that is a very good observation. Uh, we in Switzerland, the central banks will tell you there's no inflation. But the price level in Switzerland, measured by international organizations, usually comes out as the most expensive cities in the world among Zurich, Geneva, Bern, and so forth. Uh, for foreigners, life in Switzerland is expensive.
Yeah, that's right. Great, Mark. Thank you, and I'll talk to you soon.
Well, thank you, and apologies for the mess up earlier.
No problem. Take care.
Bye bye. Take care.